platforms now. Good morning, everybody. Thank you for tuning in with me today. This is AMs with Annette, your UK business and coronavirus update. My name is Annette Ferguson. I am CEO of Annette & Co, UK-based accounting firm. I'm a chartered accountant and certified Profit First professional. And I help business owners take home more money from their business for them and their families to enjoy. Of course, at this point in time, that is incredibly challenging for many businesses. And one big reason why I decided to start this AMs with Annette series to help and support you, of course, both during this time and beyond as well. I want to start off with apologies for not being live on Friday. I was unwell on Friday, and therefore I was not live on Friday. So I have had a number of you message me and ask, where is the replay for Friday's session? Unfortunately, of course, I don't have a replay because I was actually unwell on Friday. So apologies for that. But of course, we're going to be covering off anything that I would have covered then today as well. So thank you everyone who is tuning in. Hello, Cecil Promotions, Dimitri, thank you for tuning in again. Lexi Pops, hello. Carl, thank you for joining me. Amin, thank you for tuning in. Whichever platform you are on, I do very much appreciate you tuning in. So thank you for joining me wherever you might be this morning. First off, I want to start with warnings that the end of furlough schemes could see the jobless numbers rising to around 5 million. This number sounds horrendous, of course, but is actually lower than we saw a few weeks ago. So there is warnings that the jobless figures could rise to around 5 million people. At the moment, we have around about 2 million people who are jobless. So it's looking to rise quite significantly there. The first 5 months in 2020, we also saw an overall massive decrease in the number of vacancies for jobs as well, 40% lower than the same period in the previous year too. Redundancy proceedings will have to start this month for businesses that are looking to make people redundant before the start of flexible furlough, where the company has to start paying something towards the salaries. So we can expect that we're going to start seeing a number of redundancies announced over the next few weeks, and time will tell as to what this jobless number rises to. But we are hearing that we should expect unemployment to reach around about 15 to 20% of the workforce, with levels not seen since the Great Depression. That's a very scary position for the UK to be in, for the UK economy to be in, and for everyone to be in at that point in time, as and when that happens. Of course, we hope that it will not be that extreme, but based on all the data we are seeing, we suspect it may very well be. There is really no economists coming out and saying much to the contrary on that. So we can expect that it's going to be a pretty horrendous time in terms of job losses for many individuals and many companies as well. This is going to hit families pretty hard, unfortunately. So thank you for those of you who are tuning in. I do very much appreciate you joining. Thank you for the loves, the hearts, the thumbs up, all those good things on whichever platform you are on. I also massively appreciate when you come and say hello to me in the chat. Let me know that you are watching. That really means a lot to me. So thank you so much for those of you that are doing that. For when you do that, I do very much appreciate it as well. Any questions that you have along the way, please do ask in the comments. This is an update that I'm giving on UK business and coronavirus. What I do not cover is anything in relation to health, and I also don't cover anything in relation to politics. So those are two areas where I am not going to dive into, but I will speak about anything to do with the economy, the banks, the government support, businesses in general, business models, finances, all those kinds of things. So please do ask those questions in the comments as well. And I can see that a few of you have followed me as a result of this broadcast. I do appreciate that very much as well. Banks are in talks with UK regulators about extending the coronavirus relief measures for customers struggling to repay credit card and other unsecured debts until the end of September. So far, we've seen about 1.5 million payment holidays on credit cards and personal loans, as as well as about 1.8 million mortgage holidays as well. Of course, it was announced last week that the mortgage payment holidays would be extended for a further 3 months. And now we are hearing that banks are in talk with UK regulators to attempt to do something similar for credit card and personal loan repayments as well. So this hasn't been completely agreed as yet, but it looks like it will probably be on the cards, given as well that it was extended for mortgage holidays. So we could expect that potentially and maybe for credit cards and personal loans too. Of course, as I have been saying a lot over these last few weeks, we have to be really careful because yes, I understand that at this point in time, households are feeling a crunch. They are feeling very, very pressurized in terms of their funds and where their money goes. A lot of households are deciding to put these measures in place to preserve cash at this point in time to hold on to money. But of course, remember that as you take payment holidays now, your interest still typically is accrued and therefore you'll have to make higher payments at a later date. Please remember to couple that with the fact that we are going to see a huge level of unemployment. We are going to see a mass increase in redundancies, teamed with things like people's hours potentially being cut and that kind of stuff. So please remember that although this is an incredibly challenging time for many, many individuals, I completely understand. However, I suspect that the worst is yet to come when it comes to personal finances, and actually Q3 and Q4 of this year are much more likely to be significantly harder periods on individual households than this point in time. So please bear that in mind with any decisions you are making around payment holidays for credit cards, personal loans, mortgage payment holidays, or indeed requesting any payment holidays for any business debt that you have if you are in discussions around those at the moment as well. We are hearing that expectations of a summer budget seems to have dampened, and it seems that a stimulus package of tax cuts and spending commitments would be pushed back to the autumn. Again, something we spoke about last week was that the potential for a budget in the summer to be announced by Rishi Sunak, the Chancellor of the Exchequer, coming from the Treasury. The Treasury have confirmed that they are still considering some kind of economic update in July, but they are saying it would fall far short of being an emergency budget, and they really are trying to play this down. They are trying to play down any announcement that they make in July around economic stimulus packages to be very small. They are really, really pushing that down, downplaying it. They do not want this to be made into a big thing. They are worried, saying that the depressed general picture has reinforced the Treasury's opinion that any stimulus should be timed for when the economy is fully open for business. So they're very worried about announcing stimulus packages before the economy is fully opened. I'll speak about this slightly later on as well, because this ties into another couple of points that I have for today's session as well. For those of you that are just tuning in, thank you so much for joining me. This is AMs with Annette, weekdays at 11 a.m, where at the moment I am covering all things UK business and coronavirus. So thank you for tuning in. What I do not cover is anything health related or anything in relation to politics. So just so that you know, that is where we sit with that. And there is a weirdo on TikTok who I am just about to block, which I seem to be saying every day now. So that's them gone. We're all good on that front. I do not want to put other people off TikTok who are on there. It's a great platform. However, you know, you do occasionally get some odd things happening on there. So that just is what it is. Charity shops are launching recruitment drives amid fears that half of their 230,000 volunteers will be unable to return to work once stores open. Of course, many volunteers in the charity sector are in that vulnerable category, and so they are worried they're going to have a significant reduction in the number of volunteers that they have available. Charity shops, of course, can open from the 15th of June in England, as per the non-essential retail rules that are operating in England from the 15th of June. It is estimated that they will have lost 3.4 million in revenue per day during the lockdown period. They're also tying that up with an expected flood of donations, which will come in as a result, we are expecting, from people being fed up with the stuff in their home during lockdown. So they're worried about a reduction in the number of volunteers and therefore heavily recruiting at the moment, tied with a flood of donations, which of course in some ways is a very positive thing. But how they cope with that when they have to quarantine items for 72 hours prior to putting those out on the shop floor as well. There's going to be some problems there. They're quite worried about how they'll cope with that situation. And some charity shops, Save the Children, for example, are saying that they're not going to open until July because they don't feel ready, that they have everything in place for a safe reopening. As I say, come the 15th of June, the date for England for non-retail shops opening. And we like every other shop, charity sectors are of course going to have increase in costs as well as a result of social distancing measures, decreased footfall, number of people being allowed in the shop at any point in time, coupled with increased costs for things like PPE that need to be in place to protect both the staff, the workers, the volunteers, along with the individual clients and customers as well. Very similar story throughout all of retail, of course, which we've been speaking about now for a number of weeks. And it will remain to be seen how many retail premises will in fact open on that date in England of the 15th of June. Of course, that date is not applicable in other parts of the UK for opening up of non-essential retail. That is the date in England. But it will be an interesting test ground, essentially, and one that I'm sure that Scotland and Wales and Northern Ireland will watch closely in terms of what does that look like? How are those retail shops opening? Are they all reopening? Is there a number that are not? Because, of course, in some settings, it may mean that you are more heavily loss-making if you open than if you remain closed. Staff wages, PPE, etc., etc. So one to watch for many as English shops start to reopen on the 15th of June as well, which of course, as I'm recording this is the 8th of June. So we've got another week to wait on that one at the moment. As this goes out on the podcast, of course, this may already be after the 15th that we are speaking. And incidentally, whilst I am on and mention the podcast, I do want to share with you Uncover Wealth Radio. That is my podcast. You can find it in all good podcast players. We have exclusive content on the podcast that is not shared anywhere else. So do come and tune into Uncover Wealth Radio. Give us a subscribe and check out some of the episodes in there. I'd love to have you listening there as well. So as a quick plug for Uncover Wealth Radio as well. Bentley are cutting a quarter of their workforce as the UK car sector job losses now hit 5,000. They are saying that an uncontrolled Brexit risks compounded with the coronavirus disaster is causing this job losses. We've also heard of other job losses over the last week from people like Aston Martin and McLaren as well, who are also shedding jobs. This is really interesting because typically people would say in a recession, high end is more recession proof. So those purchases that are typically made by wealthier people become more recession proof because those people's income and those people's wealth doesn't fluctuate as much as it does with the general population, and they have more money to spend generally. But we are hearing these high-end car manufacturers saying that they've got a big problem. Bentley is saying that it may in fact be loss-making for the year. They can't make up 25% of their revenue within the next 6 months. So some big issues there, and that, that's a really interesting, for me, telltale sign, because if these high-end businesses are going to struggle over these next 6 months to make up any lost revenue, then that is going to be a case for the whole economy, and actually even worse so in other parts of the economy, because as I say, often these high-end things, high-end supplies, high-end retailers are slightly more recession-proof than general retail. So that's something to watch there. That is, a bit of a red flag, in all honesty, when it comes to that sector of the market, because we expect it to be more resilient than many other bits. The UK economic recovery has stalled in the final week of May as well, with consumers reluctant to spend despite easing lockdown measures. Now, of course, when lockdown started to ease in England and is starting to ease in other parts of the country as well, the hope, particularly by the Prime Minister, was that the economy would get a little kickstart and things would start to move again. People would be less worried about their money, people would start spending more, and it would help boost the economy. We haven't seen that. In the final weeks of May, consumers have still been reluctant to spend, and that is going to cause a real problem for the release of lockdown plan, which was as lockdown eases, money starts flowing, we can start rekindling the economy. That's not happening. And that further plays into the expectations of a long and deep recession felt by most people in the country, if not the world. So that is, that's still creating some issues, and that will create issues for many, many months and potentially years to come as well. Dividend paying multinational businesses have borrowed billions from the Bank of England's coronavirus pandemic loan scheme, and this is prompting criticisms from politicians over support for many companies that continue to make payouts to shareholders. So the question then leads to, if you have received a loan from any of these coronavirus loan schemes, should you be allowed to pay out dividends to your shareholders? Many argue no, that you should not be allowed to. And in some countries, in fact, they have stopped allowing companies who receive bailout support to pay out dividends. But of course, that didn't come in initially in the UK. Now, some measures now are in place to stop new borrowers paying out dividends, but only the very large companies, not to any smaller businesses. And there is a debate to say, if large multinationals are not allowed to pay out dividends to shareholders when they have received financial aid and financial support and loans, why should small businesses? Now, I'm not saying what side of that debate, which is correct and which isn't, but there is an argument to be made either way. Of course, many will say, well, with small businesses, they need that money in order for the directors to take me out and survive and those types of things. But it still leaves the question, if you received financial support, should you or should you not be allowed to pay dividends to shareholders? And that is one that is going to create a lot of conflict, that debate, because there are two sides to those arguments, and you can see both sides of those in many, many instances. Now, many people get very, very angry about the large multinationals paying out dividends to shareholders at this time, or in fact, businesses that are owned by millionaires and billionaires taking advantage of things like furlough schemes. I understand that can be a very emotional area for many, many people, but that's how we're operating. That's how it exists at the moment. And remember, a number of these schemes are in place in order to save jobs. For example, in order to save a business's finances are separate to the owner's finances. A business needs shareholder support in order to operate. Therefore, do they need to pay dividends in order to do that, or they lose shareholder support? There's all these questions that come in that mean that the initial argument is really not as simple as it gets portrayed, as it might be put forward. So that is all being debated at the moment as well, about dividends and whether shareholders should be allowed to be paid out if the business has received support as well. Sanctuary Students, a large provider of UK student housing, is coming under some criticism because it has engaged debt collectors to pursue tenants who are withholding this term's rent after coronavirus forced universities to close. This rent situation, of course, is one that has been rumbling on in many different guises now for a number of months. We spoke before about the potential of rent furlough for commercial tenants and commercial landlords. Nothing has particularly come of that as yet, despite the fact that June payments for commercial tenants will be due any day now. We are hurtling towards those due dates, yet we don't have any protection in place for them. And now we are hearing about student tenants due to pay their next term's tenants rental fees, and sanctuary students now handing out the debt to debt collectors to collect on. Hundreds of tenants are taking part in a rent strike and not paying their rent, as their universities are not currently operational. They're not currently going back to on-campus and on-site learning. Sanctuary is saying that student loan payments have not been stopped, and the government has encouraged tenants to continue paying. Therefore, they are still supplying properties. Therefore, why wouldn't they collect rent? Arguments both ways again for this. There is, in many of these situations, it's very, very easy to see both sides of the argument as well. The tourism industry is pushing for an October bank holiday to fill its £37 billion hole. Of course, we were locked down during 2 May bank holidays, part of the school's Easter break for many, depending on where you were in the country and when your Easter break fell. And the tourism industry, of course, has been incredibly hit by this situation, both domestic and international tourism, of course. Visit Britain is who is spearheading this campaign to have an October bank holiday. Now, this is really interesting as well to me, because I completely can see from the tourism industry side why they would want an October bank holiday. But this is going to cause an incredible amount of issues for business. Businesses have been closed for months. They have had many of their employees on furlough, and during furlough, many of those employees have been building up holiday to take at some point, and we've been told that that holiday can be taken up to 2 years. So there's an extension on when they're allowed to take that, but we have a situation. Now, as employers start bringing back employees, of course, October coincides with about the point in time when furlough ends as well, and flexible furlough is going to finish. If there is a bank holiday thrown in there, then businesses are going to be very, very annoyed, I would imagine, because they've got these employees who've been off for a long period of time. They've also accrued holidays. They're just starting to fully come back, potentially after a flexible furlough, and then they're able to take more time off on a bank holiday. That is not going to go down with business leaders at all. I completely see why Visit Britain wants that to happen, but I think from an economic standpoint, I think that would be a horrendous idea overall for the economy. Yes, great for the tourism industry, the travel industry, completely understand. But when we look at the overall picture, I think that is possibly going to come up against huge pushback from many, many areas. And in my own personal opinion, probably rightly so. It's very difficult to argue that people should be getting more time off work, particularly if they've been furloughed and they've already built up huge holiday allowances whilst furloughed as well. So that is where we are with that. So any questions on these topics, do let me know in the comments. I am more than happy to answer those. I can see that everyone has been incredibly quiet today. Thank you for joining me, Nicola. Thank you for joining me, Mohammed. Thank you for joining me, Alex, Holly, Scott, James, thank you for tuning in. Eloisa, lovely to see you as always. Michael, thank you for joining me. Kermit, thank you for tuning in. And everyone else whose name I cannot see, thank you for joining me this morning. This is AMs with Annette, 11 AMs weekdays. And currently I am covering UK business and coronavirus updates. All things around the governments, the banks, the support, the business in general. Of course, I do not cover anything relating to health or politics, but I am here every weekday at 11 a.m. And make sure you do mark that in your diaries so that you can join me on future sessions as well. Now, whilst I am on with you, I'd love to share about Training Tuesday, which is happening tomorrow inside the Uncover Wealth community. The Uncover Wealth community is my private community on Facebook. I would love, if you are a business owner or entrepreneur, if you would love to join me in there, I would love to welcome you there. You just need to type in Uncover Wealth Community into the search bar in Facebook, and then click join into that group. As I say, we have Training Tuesday happening in there every single Tuesday, and tomorrow's topic is your business model ready to stand the test of time? So I would love to have you in there to join me on that. Now, if you're watching the replay and it is after Tuesday, then you can still come in and catch the replay of Training Tuesday in there too. So do not think you've missed out completely. If you are watching this after that has happened, or listening to this after that has happened, you can still come into the Uncover Wealth community and join me in there for Training Tuesday. As I say, that happens every single Tuesday exclusively inside the Uncover Wealth community. So I would love to have you in there for that. I cannot see any questions coming through. If anyone has any questions, do make sure you pop them in the comments so that I can answer any of those. I can't see any coming through at the moment. So in which case, I will sign off for the day, but thank you again for joining me. As I say, back every single weekday at 11 a.m. UK on whichever platform you're watching. We are live on TikTok, Instagram, Periscope, Twitter, Facebook, YouTube, and of course inside the Uncover Wealth community as well. So weekdays at 11 a.m. make sure you mark your diary. And also, of course, as I said, Training Tuesday, every single Tuesday inside the Uncover Wealth community. Do make sure you join me in there. You just need to head to Facebook and type Uncover Wealth Community into the search bar, hit join on the group, answer the questions, and we will let you in to come in for Training Tuesday. And of course, beyond then, and tomorrow's topic is your business model ready to stand the test of time? So I can't wait to speak to you guys tomorrow, both in our 11 a.m. AMs with Annette session and also for Training Tuesday inside the Uncover Wealth community. Thank you everyone for tuning in. Have a wonderful, wonderful day. And I will speak to you all again soon. Take care, everyone.